Ladies and gentlemen, the recent report for Canada and our inflation is in, and it is bad. It is coming in hot again. It's way high. And everyone who knows this, that we know, right? We're going to the grocery stores, we're paying gas. We know that the prices are high. So we're going to continue to do what we can to fight this. We have to out earn it. So let's take a look at this report that's coming in for today. Inflation rate is dropping to 5.2% in February, but grocery prices are still up. Now, this is the confusing part for the majority of people, because in that same sentence, it says inflation is going up, which means it costs more money, but it is dropping. So which one is it, right? So prices continue to go up, but they are not going up at the same pace. So last year, you had a loaf of bread for $2, then it went to 2.50, and now it's only going to 2.70. The price is still going up, but it's not going up at the same pace. We expect that, right? Because of the amount of money that was printed. Absolutely. So let's continue on with this article. The rate previously slowed from 5.9% in January. You guys know that a lot of this stuff kind of bugs me. It says that Canada's inflation rate cooled to 5.2% in February, which is the largest deceleration. So they're proud of that. But you know, the deceleration that happened in April 2020 was because of a pandemic. I don't think that they can pat themselves on the back. If we continue on, groceries are still outpacing overall inflation. Like I always tell you, is that the price of things that you need will always go up. The price of things that you need will go up. Gas, food, kids' clothing and stuff. But the things that you want, those prices will come down. What are those prices? We're talking about the prices now of skidoos and RVs and fancy cars and cottages and trips and stuff. When people have to make massive cuts to their lives, they can't cut out soap, or they can't cut out kids' clothes or whatever. You can't make cuts everywhere. So supply constraints are coming from bad weather and food growing conditions. You guys know this from following me for the past year. I said last year we were in a lot of trouble, right? The trouble was because of Russia and Ukraine and cutting off all of that food. So if we look here, this is annual inflation for Canada. The annual inflation, you could see overall in this blue, it is going down. But overall, we see food purchased from stores. I don't actually know, because the majority of Canadians are buying food from stores. I mean, where else are you buying it? From an individual farmer? I'm not really sure. But food purchased from stores, we have to make that distinction, apparently. All right, so let's go into the snapshot on the CPI for Canada. And if we look at the way that they calculate this, they actually have this weird circle. So you could figure out how they are calculating their inflation. If you look at it, it has home accommodations, all items, shelter, food, but you could see so many sub categories. Cookies and crackers, they're going to base their rating based on 0.19% just on cookies and crackers. And so this is how they can fudge the numbers, right? They could change breakfast cereal, instead of being by 0.34%, they could change it to 0.5%, 1%, whatever they want. If we get into shelter, you can click on shelter and take a look. You can see that how they calculate homes is they're going to say, well, homes only account for 29% of properties, whereas other years it may have been 33%, 35%. So they can fudge those numbers however they want. Owned accommodation, so the majority of people who own properties, is only valued at 19%. People with mortgage interest, they're only going to weight that at 2.4%. Remember, interest rates went to the moon this year, so they don't want that to affect their numbers too much. They have to make it look very, very small. So this is something that you always have to pay attention to, is how do they get to those numbers? I think that that's very, very important that we do that. If you want to go to StatsCan yourself, you can click right away on the Continue Reading tab, and it gives you the main points for the year. One thing that drives me crazy is that they mention excluding food and energy. Okay, so of course, right, nobody has to heat their home in a cold winter in Canada. Nobody eats food, right? So they say prices are only up 4.8% if we exclude food and energy, and all items excluding mortgage interest. So you're going to take away mortgage interest, we're going to take away food, we're going to take away energy. I mean, whatever they have to do to make the numbers work. And I don't know whether to smile or cry by that. But if we continue on, then it says grocery prices remain elevated. Like I said from last year, right? We have to make sure that we're paying attention to food prices and to be stocking up. Food purchased from stores rose 10.6%. So I don't really know what that means from stores. 95% of people in Canada buy their food from stores. And it says unfavorable weather conditions. Yes. But remember, fuel is the driver of the entire planet. It says higher input costs, such as animal feed. Well, if our food is going up in price, so is animal feed, right? And energy and packaging materials, which is both petroleum products. Remember last year we were talking about Ukraine, and Ukraine and Russia are the massive wheat producers of the planet. If we take a look at that one line there, it says price growth for cereal products up 14.8%, which we are not surprised at all, because we knew that that was going to be coming. Now, energy prices fall on greater supply. Now, they do not want to give a lot of weight to this, right? But in reality, prices for fuels and other fuels, fuel oil and other fuels, rose 24% compared to 36%. 24%. Yet they can sit back and tell you inflation isn't bad. It's only 5%. It's coming down. But I ask you, if you're going to go fill up your car, if you're going to go buy propane, you're going to buy anything, do you notice that it's only gone up 5%? No. And it's because of that graph that I was showing you how they weight it. It's only going to count for 12% of this rating or whatever. They can do that. And they've been doing that for decades. So let's continue on then. That fuel price is going to be continuing up and up and up. Now, if we take a look at the way that they did calculate inflation way back in the day, do you notice this? Consumer inflation, 1980. In 1980, they did a different way of measuring your inflation. So the way that they measured it in 1980 was, if you took one steak and 1 gallon of milk and 1 dozen eggs last year, and then you bought 1 steak, 1 gallon of eggs, 1 dozen eggs this year, okay? Identical items, and then they put them next to each other. Has the price gone up or down? Okay. So that's how we would generally accept inflation to be. Now, if we go look at this chart, if we measured it the exact same way they did in the 80s, we currently would be sitting at like 14% inflation, which is a lot closer to what you're noticing in your food bill, I'm sure. But notice, if we go back to the way that they were measuring it initially, if you go back to StatsCan, go here, and then they have a the chart that I had showed you with that round circle. I'm sorry, I don't remember where it was. If you look at the way that they measured it today, it's very, very different from how they did back then. They would weight it differently. Like back then, houses might take up 35% of the index. So if housing prices is going up like crazy in Canada, it would make our numbers look bad. So they're going to give it less weighting, meaning today it's only going to count for 29% of that 5% rating. And they can move those numbers around for their own benefit. But here's what I want to teach you is, at the end of the day, you and I know from going to the grocery store, buying gas, buying whatever we have, that our prices are way more than 5% than what it was last year. Would you all agree? I think that we would agree. So if that is the case, my thing is, I wouldn't put too much weighting in believing that 5% that's there. You have to look at your own bills and see how high your fuel prices are going. So this is not the end all be all number. I'm trying to encourage you to continue asking questions and learn from this stuff. Now, if we continue on, you guys, the Bank of Canada is, they put out an article, bankofcanada.ca. Please go check it out. The Bank of Canada, Bank of England, Bank of Japan, European Central Bank, Federal Reserve, Swiss National Bank are all announcing today coordinated action to enhance the provision of liquidity for the standing of the US dollar swap line arrangements. Now, that's a lot of big words, you guys, but here's what's important. The United States is the reserve currency of the world. Like it or not, that's the way it is. They're the king dollar. 80% of the world's transactions happens in US dollars. Canada is the US's largest partner, and it's their closest trading partner. If you are going to be a good investor in Canada, you must always be on top of what is happening in the United States and in Canada, because what happens in the States also happens in Canada. We have to pay attention to that. The US dollar is in serious trouble. And so this is where the European central banks, the Swiss bank, Australia, Japan, all of the banks are now trying to shore up the US dollar to prevent its collapse. So there's a lot of trouble that's coming in the market. So I'm trying to encourage you to keep on asking questions, keep on getting better. So if we go to the next article here, this is what we're seeing in Canada. Ipsos gave forward this this survey out there. A growing proportion of Canadians are completely out of money, saying they have no way to pay for household necessities. Nearly 1/4 of Canadians say they were completely out of money, saying there's no way they could pay more for household necessities. 54% of Canadians who are struggling to absorb that price. So here is what I want to encourage you. If you recall, in 2009, the housing collapse that happened in the United States, all of that trouble happened with 4.5% foreclosures. 4.5% of people could not afford their bills, and that caused all of the problems. What do you think would happen if 54% of the population ran out of money? We're talking 08 on steroids, okay? Like way, way worse. And so all of this is because they printed a lot of money in 2020, 2021, right? This is the bill that is being paid. There is massive problems that are coming now and massive risk. I said a year ago I would have sold my home. We did sell some, and I would been saying for a year it would have been time to sell your properties because I was worried that this would happen. There's a very real index. 1% of interest rate change moves your home price 10%. It's like a lever. So as interest rate goes up 1%, home prices drop 10. It goes up another 1%, it drops another 10%. Also by percentages, if your interest rate moves by 1/4%, your home moves by what? 2.5%. It's like that lever. So it's a 10 times lever on your property because everything is going to have a mortgage on it. It's not the same in countries that buy their homes in cash. We live in a debt market. So we have to pay attention to that. And I want you to pay attention to that. Those rates are going up because the governments need cash. The rates will go down. Absolutely, they will. But we don't know when. Because if we think, planes went into towers, craziness. If we think of 08, the world was going to shut down. 2020, we thought the world was all going to be shut down, right? It has to be some cataclysmic event for it to get back down to zero. So this inflation number, I know that it is trying to be framed as encouraging, but a lot of the things that they're saying that they're proud about was because energy prices are low. It's the only thing on the index that went lower. But my question to you is, does Canada, or the States for that matter, really dictate the price in inflation? No, they do not. That is OPEC, oil producing and exporting countries, Saudi Arabia, Russia, all of those countries over there, right? They're the ones that are producing it and setting the world price. So as far as the only item that went down in price, it was completely out of our control, so we can't pat ourselves on the back for that. My thing for you is inflation will continue. Please go study the period between 1945 and 1950. It's the exact same thing. Please study that period because it'll teach you how to get out of this and how to profit from this. If you want to get a little bit safer, you guys, I always suggest everybody buy a little bit of gold, a little bit of silver. You can start with as little as $35. I want you to get some safety for yourselves. And please make sure that you're not going to be caught up in all this banking contagion. Make sure if you're in Canada, your accounts are under 100,000. If you're in the United States, under 250,000, just to make sure you're still going to be insured. All right, my friends, I hope that this helps. Please consider subscribing, liking, letting your friends know about it. We really appreciate it. Stay safe out there.